My name is Brady Deaver. I'm a partner in our PwC practice in Australia. I've got a colleague here who's going to be co-presenting with me today, Ed Newst, who's a director in our PwC Australia practice. We're really excited today to be given this opportunity to talk to you all and present here at the Google Next conference about a solution that was really spawned off of the same conference 9 months ago, where we, like you guys, were sitting, PwC were, Ed and I in particular, were very lucky and fortunate to have an invite to this same conference, and we were sitting in the audience looking at a couple of solutions platformed on GCP and using some of the ML and OCR technologies that Google has for some accounting problem solves. And we were sitting there as tax guys thinking, gee, how good would that be if we could take it a slight step further and start to solve, on top of the accounting fix, some of the bugbears that we see in our day-to-day lives as advisors and also some of our clients from a tax calculation and classification perspective in systems. And so that was really where we started. So we started as an idea, as a thought bubble 9 months ago in July. Literally the next day, we were lucky enough to have some of our Google partners catch up with us, and we were able to then sit down and walk through some of the ideas, and we were really, really fortunate that Google kind of bought in really, really early into this opportunity. And so a very, very short but intense journey kind of started in July last year to get us to where we are today. So really, really excited to be able to show you where we've got to. So what we're going to do today is just spend a few moments, if okay, around the business problem that this technology is aiming to solve. Conscious, given that we're in the United States, the use case that we're talking about here is indirect tax, value-added taxes, and GST, right, which is largely a non-US tax. So I might just spend a little bit of time, if okay with you all, just to walk through the basics of what the business problem is and the tax problem that this solution is trying to solve. I'll then hand across to my colleague Ed, and Ed will give us a live demonstration of the solution in action. It has just come out of POC phase in Australia. We're really excited about the initial results and I'm super keen to show you what it looks like. Then we'll talk a little bit about development roadmap, given that we are just out of POC and we have got big plans for this. So we'll talk a little bit about that, how we're planning to adapt it in certain jurisdictions, given the differences in tax and business problems across the world. And then we'll spend a little bit of time on some of the future use cases and some of the questions that our clients have already started to ask us around what the solution could potentially do outside of tax. And then hopefully, if we can stay to time, and I know Australians are notorious for waffling and talking, if we can keep to time, we'll make sure we've got a few minutes at the end for some Q&A. And when we do the Q&A, the ask that we'll just have of you all is if you could just stand up and maybe just take a microphone in the aisle here to talk. Okay, so the tool is called Zipline. There's a story behind the name, as some of my Google Australia colleagues in the front seats here will know. I'll give you the official reason why we're calling it Zipline. It is an OCR and an IA combined solution. The reason why we've called it Zipline, and has got a meaning, is because we see this piece of technology as solving or bridging a gap that has existed and has been a bugbear in my world as an indirect tax advisor, and my clients' worlds, trying to cope with indirect tax automation in systems, because it's the last area where there is a manual process that can't, until now, have been automated. And we're really excited to be able to say that we can get this automated on the accounts payable side of the tax ledger. And so for that reason, because we're bridging this gap, we called it a Zipline, right? And then the simple reason why, the other reason, so it's got a double meaning, the other reason why it's a Zipline is because the PwC office and the Google office in Sydney is literally separated by 100 yards of water. And it takes us half an hour, 45 minutes to get across. But if we had a Zipline, we'd be there in 2 seconds. So that was part of the other reason. So. And so like I mentioned, so this is an OCR AI tool. Ed will talk a bit about functionally and technically how it works. I should just caveat that by saying, for all the techies in the room, we aren't techies, we're tax people. We know enough about the tech to be dangerous. What we've been really fortunate to have in both of our organisations, in Google and in PwC, is a whole bunch of really, really smart tech people and engineers that can help us bring this to life. to solve the business problem that we have. But we will do our best to answer any of the technological questions around sort of functionally how it's set up to the extent there are any of those questions. Okay, so the business issue. So VAT and GST, so value-added tax, predominant tax on consumption in Europe and in most of Latin America and in most of Asia Pacific. It's called goods and services tax, GST, in some of those jurisdictions. It's a little like sales tax in the US, except that it's two-sided. So not only do people, so businesses that sell goods and services have to collect and pay tax to the authorities on the things they sell. So that is a feature of the GST and VAT regime. The critical difference between GST and VAT and sales tax, however, is that, and this is the two-sided nature of the tax, is that you as a business are also charged VAT and GST on the things that you buy. So it's an input and an output system. The good news is, for businesses, is that for the vast majority of the purchases that businesses make, the VAT or the GST can be reclaimed. It can be recovered as a refund from the tax offices. But this is subject to a couple of key conditions. And this is where the manual problems have existed in our world since the 1970s when the tax was conceived by the French. The two key conditions to be able to get that GST or VAT that's been incurred on your purchases back from the tax authorities: one, that it is a specified business eligible purchase under local VAT and GST law, right? So there's a legal requirement that you need to meet, and that's based on tax rules and legislation. That business and tax legislation, those tax rules are then augmented or qualified by the type of business that you are. So there's a legal question: is it or isn't it recoverable? And then the second question is, based on the business type that I am, as an acquirer of services or goods, how does that impact or change my recoverability of that tax? So that's the technical problem. And in 150 countries around the world, those rules are all different. The second problem is a document problem. And we were lucky enough to kind of hear some of the Q&A and the interviews over in Moscone just before we went live. And one of the ladies was talking about dark data. And that's data that is trapped on a paper document in an unstructured form. And that's the problem that we have in the VAT world on purchases. We need to be able to identify that we hold a valid document to support our claim. So one, we need to make sure we're legal in terms of complying with the law. Two, we need to check that against our business type. And three, regardless of what goes into our system, we need to hold a valid document in a specified form. And so what that has meant in terms of business process is that typically VAT and GST on purchases has been systemised to a degree. And that is effectively once the data is input into the system. Okay, so when a purchase is made, a PO is struck and an invoice is received, either a vendor invoice or an employee expense, there's a big piece here around employee expenses, the data goes, somebody has to actually lift the data off those invoices, make a GST or VAT decision, what kind of expense it is it recoverable, and if it is recoverable, what code do I then apply to the transaction as I'm posting that transaction into the system. Okay? Once the transaction's in the system, systems are very, very good at then automating how the GST should then flow through the accounts and then ultimately onto a return so that you can claim it back from the regulators. And so that's what effectively we mean by a tax engine up on the screen. So tax engines are really, really good at running rules-based logic to identify and capture GST or VAT. But the key criteria is that we capture that data off of those source invoices. And that old adage of, junk in and junk out is really, really true from a VAT and GST perspective on purchases. So what we find, as we've talked about, is a very manual process across a number of our clients across the world. And that could be a native accounts payable function that sits on site. It can be a BPO, an outsourced function. But there is always inevitably some form of document checking, manual input, and process. And what we see is it costs, it creates a lot of issues for our clients. The first issue is it costs money. And I've got a stat up there from SAP Concur. They estimate across the VAT world, GST world, there's around 20 billion US dollars of VAT and GST on taxis, on hotels, on flights, on meals, that just goes missing. And the reason why it goes missing is because, one, businesses see these as low-cost purchases, but they do add up over time, obviously, given the number on the screen. Two, the employees often that are making reimbursement claims need to make those tax decisions off of the invoices. And three, because of that, the risk of an employee selecting a wrong tax code is simply too high, so businesses choose not to engage and claim that GST back. The second thing in the vendor world, so outside of the employee expense world, in the vendor purchases world, we see a lot of problems, particularly in Australia, around that manual process risk on accounts payable. And some of the stats out of our Australian tax office actually show that almost 70% of errors on the accounts payable side, and this is data collected across the whole of the Australian taxpayer base, are caused by system and process deficiency. So there's risk. That can go both ways. You can overclaim or underclaim because of the manual gap. And then three, efficiency, right? So you're asking, in this manual world, accounts payable and BPOs, who aren't often tax trained, to make tax decisions and process documents for tax purposes. And that takes time and effort that can be redeployed to other more value-adding tasks in the business. The last thing that I just wanted to touch on in terms of the current state and why we saw this as a really key problem to solve is that the VAT and the GST world is undergoing a huge shift at the moment, which is driven by technology. Okay, so as it stands in the majority of the VAT and GST world, at the moment, it's a traditional tax compliance reporting system. And what I mean by that is transactions occur in a period, in a month. The month stops. We've got 21 days to then collate all of that data out of our system, put it onto a tax return, and file. And in that 21-day period, between month end and when we need to file, there's time for us to run checks, to extract reports, to do reconciliations and to file returns. Right, so we've got time to look back over our data and check that it's right. The problem is, where we're now moving is to what I call a real-time reporting electronic filing regime. And this is no more pronounced than in places like Spain, where the regulator now says we're doing away with that VAT return traditional process and we're replacing it. And what we're replacing it with is, every 4 days, I want a direct upload out of your source systems as a client, and I want your AR, I want your AP, I want your GL, and I'll work out how much tax you have to pay. And I'll do it every 4 days. And you have to pay it every 4 days. Okay, so you can see that fundamental shift from, a time lag between when a transaction occurs and when we need to report and when we need to collect and pay, to now that being much more compressed, and the tax offices across the world having a lot more of your data than previously you gave. Okay, so for us, what that means is it really, really enhances this importance of getting those tax decisions right in the system first time. And so we think Zipline does a lot of that. We think it fills that last mile between invoice receipt from third-party suppliers, from employees who want their expenses back, into the system to allow tax rules and classification to work, to get your data right in the system at the time the transactions are processed. And I might just hand over to Ed now, just to give you a little bit more overview in terms of the solution and where we're at, both as a standalone offering, but also some of the exciting opportunities that we're looking at the moment in terms of partnerships and integrations with ERP providers and expense platforms like SAP. So, for example, we're in the middle of conversations right now with SAP Concur to have integration capability to actually have this as an ongoing sub-process within your employee expenses system. Similar also for the accounts payable modules in the core ERP providers. So at the moment, a standalone solution, but we're really, really excited about what integration looks like and having this ingrained as a sub-process for tax inside of the ERP in the future.
Morning, everybody. We've got the solution overview on the left-hand side. As Brady mentioned, I'm not a tech guy either, but I can talk you through basically what the technology stack is. I think the key points are on the right-hand side. So what are we doing? We're extracting the data from the underlying source invoices, utilising Google's Cloud Vision API. And we're also using a machine learning-based model to take that OCR output and to classify the fields on the invoice or the receipt. As Brady mentioned before, we then have to validate whether what's on that invoice meets local requirements. So there's a set of tax rules which we've built in from each local jurisdiction as to what fields are and are not required. Part 3 is where it starts getting really interesting, because having then taken those data fields, having applied the ML logic to get the relevant data fields categorized, we can then run PwC classification over what that expense type is. So as Brady mentioned before, different expense types are capable of different tax credits. So the capability we've built in here allows for an expense type determination and differentiation between that expense that's been incurred where it's relevant for tax recovery. And lastly, we get a validated tax reclaim amount per transaction line item. So if there hasn't been a booking in the underlying system, that will be the GST reclaim amount, or VAT. If there has been, then we can reconcile the Zipline output with the underlying system output to the extent that there's a difference that can be investigated. So if we look at the solution itself, I think the key point is that we've got those two different models. So for invoice extraction, we've got an ML model that sits over the Cloud Vision API, data extraction. We also use the Cloud Translate capability where the invoice is not in English. And we have that separate model for the classification in the bottom right-hand corner of the expense type. So for those who are interested, the model that we're using is a long, short-term memory recurrent neural network. I think I got my memory right there.
Sorry, just to jump in before we jump onto the demo, I think that's a really important point in terms of those 4 gates, in terms of the business case that we started to think about 9 months ago when we first saw some of this technology in use. So there are a lot of OCR, as many of you in the room would know, a lot of OCR providers that look at expense posting, data extraction from unstructured into structured. The thing that we really like about this, and particularly the Google technology that sits behind it in the Vision API and the deep learning models, is that unlike a number of other OCR providers, which takes a template or grid-based approach to OCR, where we teach the machine to look for things in certain quadrants of a document, the benefit of the Google technology here is that because of the deep learning model that sits behind it, and the hundreds of thousands of documents that have sat in the training data set, is that the tool keeps looking no matter where the data is located on a document to get the thing that we need. Okay, so that's the first thing that I really like about the Google tech and the differentiator that it gives. The second thing, which is where I think the incremental value comes off some of the existing OCR processes for tax, is that not only does it just extract for the purposes of posting, it extracts, and while it's extracting, it applies smart logic to work out whether the document is valid from a tax perspective to solve that point we spoke about before. And then it also does things like pings, internet registers for tax authorities to validate that the seller is who they say they are, that their ABN or their VAT ID is correct, so they are genuinely registered, and that matters in a lot of jurisdictions. And it also validates the GST calculations or the VAT calculations. So are we seeing a $10 GST amount for a $100 purchase? In Australia, the VAT rate is 10%. So it is doing a whole bunch of smart calcs using the ML based on tax rules and logic that PwC has co-created together with Google to actually lift the data and do smart things to it on the invoice level. So that's gate 1, right? Then once we get through the invoice validity phase, we then kick it into another ML model, which is a tax engine, which actually runs categorization. So looking at, for example, if we've acquired stools, how does the body of data that sits in the ML model categorize stools for VAT purposes? Office equipment. So it'll say stools equals office equipment. and that'll then do the auto categorization, which then allows the standardization to occur for a tax calculation rule set to then do the rest of the job in the system. And so, you know, the smart technology that Google has in Vision API and their deep learning models, the TensorFlow models that sit behind the tax rules engine, augmented and supplemented by PwC tax content, for us is where the magic happens in this. And we're really, really keen to show you kind of how this works with a few real, real life scenarios. But that I think is the key differentiator between this POC and what other OCR providers on the expense side in the market do today. We actually add some smart analysis at the time that the OCR is scanning the invoices and processing those invoices. Sorry, Ed.
No, that's fine. So if we can move on to the next process, which outlines what the business process actually is at the moment. If we have a look at the top line here, this is what's happening within the expense management system. So we've got data going into the system. We've got typically an AP clerk or an employee making those classification decisions. Where Zipline comes in is that second line. So as Brady mentioned, the TensorFlow models, the Cloud Vision API, the Translate API where required will kick in. And then that triggers the automated process of that validation, classification, and then tax credit calculation, which can then feed automatically onto a tax return or in a live reporting environment directs to the tax authority. So with that, I'll jump into the demo and show you exactly how it works. Excellent. So you will notice that the UI has not been designed as a client-facing UI at this point in time. This is an internal PwC UI. We are developing a client UI, but for the purpose of the proof of concept, we kept this as an internal one. But certainly our anchor clients are very interested in the visualizations that we can take from this process. So the first step is going to be to get the documents into the system. So here I'm going to select 5 invoices. We're going to upload those invoices into the system. You can see that that happened very quickly. We are unconstrained by volume. So to give you an example, one of our anchor clients has several 100,000 invoices. Again, the power of the Google tech allows for the OCR to happen in a matter of milliseconds. So we're completely unconstrained by data upload. We are working with partners such as SAP and SAP Concur on utilising their APIs to go direct into their systems, because for bulk data extraction, using their APIs is most efficient. That said, we also have developed RPA solutions to allow for bulk extraction of data where an API is not available. So those files have now been uploaded. You can see that we have each of them here. To the extent a file has been multiple pages, it's automatically split it into individual pages. We can now go in and look at a particular invoice. So here we've got an Australian invoice. It is a valid tax invoice. So we'll show you how the OCR process has worked. So the OCR has identified each of the individual text blocks on the invoice. Once it goes through the TensorFlow model and applies the machine learning, you'll see, it's probably in small text here, but you can see that it's identified things like the vendor name, the vendor tax registration number, the date of the invoice, description, etc. On the right-hand side, we have all of the relevant fields for, in this case, an Australian invoice. And again, given that we have the content of the PwC global network, we know what fields are required for what document type in every location around the world with the VAT or GST system. So you'll see here that TensorFlow model has taken each field and identified whether the value exists within that invoice. So here we do have the phrase tax invoice, which is a requirement. We've got the date, total amount, GST amount included, the vendor's tax registration number, etc. So as I said before, in a matter of milliseconds, we've taken an invoice, it's been uploaded, and then OCR'd, the ML model applied, and we now have all the relevant fields available for either input into the underlying system or validation of the underlying data input. So all of those invoices have now been uploaded, and we're then going to visualize that through what we call a Swift dashboard. So the Swift dashboard is where that stage 2 ML has happened. So this is where the expense classification and validation is taking place. So you see here we've got some stats up top. We've got how many transactions have been uploaded into the solution, the total value of transactions that's been classified, the total VAT spend on those transactions, and then the resulting VAT claimable. So going back to Brady's earlier point on live reporting, here we can take an entire data set for a large organisation, and within a matter of minutes, it's gone through the process, been validated, and is producing a VAT claimable amount, which can go on a return or directly to the tax authorities. We've got some visualization here over the amounts, the VAT spend, and the categorizations. And as I mentioned before, we're developing this further with clients for a client user interface. But what I want to do now is just take you through what those 5 invoices were and to show you how the classification and validation process has worked. So I'm going to start with one which is a valid invoice but is foreign. So a foreign invoice is not going to be subject to reclaim in Australia. If we have a look here, this is an invoice from Singapore. It's a hotel invoice. This would be a valid invoice if it was being incurred by a Singaporean company in Singapore, but here it's been incurred by an Australian, so it's not claimable within the Australian GST system. So if we click back into Swift, we'll see here that it was a valid invoice, however it's been classified as foreign. It's listed the total amount, it's listed the VAT spent, and here it's made that tax calculation decision that the tax claimable is 0 on the basis that it's not local tax. Interestingly enough, there are a lot of cross-border tax credit mechanisms, so even though it's not claimable within Australia, we can then report for potentially a Singapore reclaim where the client will be able to claim that $73 back in a separate tax return. If we move on to the next example, and this is the one that we really try and avoid, this is where we've got a local invoice, but it's not a valid invoice. If we have a look at this example, this is an Uber receipt. The value here is $83. In Australia, we have a rule that anything above $82.50 requires certain requirements that aren't required under that threshold. So one of the requirements is it must have the term tax invoice at the top. You can see here that the term invoice appears, but the term tax invoice does not appear. As such, when we look at how the solution has pre-filled these fields, it does not apply a value for the tax invoice phrase appearing. On that basis, when we go back into the solution, you can see that it's been deemed to be invalid, it's domestic, there is an amount of tax on the invoice, but it's not claimable because we have an invalid document. These are the types of documents that are really useful from a management reporting perspective to then inform the control and process environment upstream about what type of data and invoices is being provided by either vendors or employees into the relevant systems. Because here we've paid tax out, we do have an implicit right to claim it if we have a valid document, but for whatever reason, we don't hold that document. If we did, we'd get the tax back. This is a massive gap in our client base where they're paying substantial amounts of tax out, but the document is not valid. The third example is a valid one where there was no GST on the underlying invoice. So if we have a look here, this invoice formatting is perfect. It has all the required fields. But if we have a look, it was international travel, and therefore there was no GST in the price. So the solution has classified that as a valid invoice, as a domestic invoice, but with no GST recovery because there was no GST spend in the first place. One of the risks with previous solutions is that when you have a category like airfare, which could potentially contain tax or not, depending on whether it's domestic versus international travel, if you automatically assign a tax credit calculation to that airfare category, that may have imputed a tax credit, in this case, where there was no tax paid. So by going into the source document and validating it, we take out any risk that the underlying classification of that expense type account may have been incorrect.
And if I could just add, so this is for us where the real value occurs. So I mentioned before around systems having rule sets to calculate GST. We see time and time again the system doing its job perfectly. And what I mean by that is when the code is hit that says this is a tax reclaimable expense, everything works. The problem is, if you're leaving it to an employee or an accounts payable clerk to rely on that first decision to get the categorization right, then that's where the risk occurs. And so what this solution does is it scans the source document and works out from the source document based on the ML model that sits behind what kind of expense it is, and is it classified as a recoverable expense or a non-recoverable expense. So that gap where you're relying on a non-tax trained person to make a tax call goes away. And that's where we see the real value here.
And as business processes have become more and more outsourced and more removed from the business, that type of misclassification is happening more and more often. So I'll run you through just the last couple of examples here. I want to show you a standard invoice. It's the one we looked at before. So as I mentioned earlier on, all of the relevant requirements for a valid tax invoice are here. So the solution has deemed the invoice to be valid. It's a domestic invoice. It's capable of full VAT or GST recovery because here it's a hotel invoice. It's a valid business spend. So you'll see here that the VAT spend has been identified and the VAT claimable has been identified as exactly the same amount. So this is where we would expect the vast majority of our clients' invoices, this category to fall into, where you do have a valid document and you're auto-calculating the tax. But to Brady's earlier point, you're getting the surety that on each and every occasion that the system is working correctly rather than applying a default rule. And the last one I want to show you is where the real intelligent part of that second ML model is coming in. So this is where we have an entertainment expense. So here we've got an invoice or a receipt from a restaurant. The value shows that it's not subsistence. I may or may not have participated in that event. Looked like it was a good one. So here, that logic that's applied within the ML model of looking at the vendor type, of looking at the spend, the location, has been able to determine that rather than being a general expense, this is an expense of an entertainment nature. Now, entertainment typically in most VAT jurisdictions has a restricted recovery because the tax office doesn't want you to be able to go out and have a high value lunch or dinner and claim all the tax back. So here, we've identified that it falls within that category. It is a valid document. So when it comes to the VAT claimable amount, we've been able to apply the relevant local rule for restriction. So the VAT spend amount is double what the VAT claimable amount is because we only have a 50% right to recovery of entertainment expenses. This again is one of those scenarios where if you've got an AP clerk or an individual trying to do a classification in an expense type which is not subject to full recovery, that gets very, very tricky. So the ML model that sits behind this has been trained for years by PwC to do expense type classifications, both for indirect taxes, corporate and other taxes. And so we're able to apply it here to do that classification, and we can use the same expense classification methodology in any country that has a differentiation on tax credit of different expense types incurred.
So what we've done here in Australia is really just categorised down to what we would call the lowest common denominator from a GST recovery perspective. And we need to go deeper and deeper depending on kind of what the business is. So for example, financial services entities in most VAT jurisdictions have a really complex VAT recovery profile on purchases. And so the SWIFT classification logic, the PwC classification logic that is deployed into the Google ML model enables us to categorise, just like what you saw on that entertainment expense, to look at the individual description of the line on the invoice, apply business rules against that to understand what kind of expense it is and who's incurring it and in what cost centre and what department, and then apply categorisation logic, which then tags to a GST or VAT result. Okay, so that's where the tax smarts really kick in and where the ML models really, really serve us well because we can access hundreds of thousands or millions of similar transactions posted by all of our other clients obviously in a fully sanitized way to deal with privacy, to then effectively come back out with a suggested classification and categorization, which is really, really powerful, because effectively what we're now doing is moving away from rules-based tax decisions to model-based tax decisions, which is really exciting.
So that's the end of the demo. We thought we would then take you through where we're going to take the solution over the next couple of years. So the product development roadmap for the rest of 2019, as we discussed earlier, we finished the proof of concept earlier this year. We've now gone live with this as a live client solution within Australia. We're very quickly localizing the solution in additional jurisdictions. This will be our global solution, so we're moving very quickly. I'll talk about those locations in the next slide. And next, as I mentioned earlier, the API configuration to expense management systems we see as key in the short term, because typically our clients really struggle with the extraction of data. So being able to have APIs into the main expense management systems, including the SAPs, SAP Concur, Oracle, etc., all of those main expense systems we'll be looking to configure into their APIs. And UI enhancement, as pretty as this looks, or did look, we're very conscious that clients do want value-added analytics and reporting. As Brady was mentioning earlier, if you think about the expense classification analysis that we've been able to do, some of our clients have talked to us about using that for broader management reporting, because a lot of them don't have visibility themselves over the different classifications of expense spend or potentially misclassifications. So broader use cases we're looking into as well. So I'll move on to our localization strategy.
Sorry, I know this back and forth probably isn't, we should have really prepared earlier for the back and forth. I apologise. The one thing I was just going to add was the API and configuration into the ERPs, and I kind of touched on it earlier, really, really critical for us, because this is one part of a broader compliance process stream for tax. So we've got calculation in the system, and then that data then moves into reporting suites. And SAP and Oracle in particular are developing their capability around tax reporting and filing out of the ERP, as opposed to extraction and then filing via a third-party solution. And so what this is really, really exciting about is this enables end-to-end automation. And PwC actually is working with SAP as well to build tax reporting solutions inside of the ERP to do the filing to the regulator, some of the the post-filing analytics and reconciliations and trending and variance testing. And so by having back-end automation inside of the ERP to do tax compliance and reporting, combined with tax calculation at the front end, all inside of the system, is a really, really exciting prospect for us. And it's enabled by GCP and Google AI and ML, through the collaboration that PwC, SAP, and Google are partaking in at the moment. So really, really exciting times. Sorry, Ed.
That's all good. So our localization strategy, we've started in Australia. We're sort of heading northwest through the world. We're localizing for 3 different reasons. So the strategy is driven by the complexity of tax rules. So we certainly believe that we should tackle complex jurisdictions early, because if you can do it in complex jurisdictions, you can do it in anywhere. And the EU and Canada are examples of particularly complex jurisdictions. So those localizations are already underway. The value of tax at stake, clearly our clients want us to localise where they have the biggest tax risk or biggest tax amount sitting on the table not being collected. So an example of that in the Asia-Pac region is Singapore. So Singapore is the hub for firms in the region which have a VAT and GST. Hong Kong does not. So our Singaporean-based clients are very keen to get this solution, so we're localising there. And India is an example of where you have very complex local country validation rules. So the process for claiming tax credits and based on invoices in India is very complex, so we're localising there as well. So by localising in those different countries which have those different complexities and requirements, we're confident that we will then have a product which is truly globally capable based on those first 5 countries. And certainly we're looking to replicate what we've already done from global VAT reporting automation, for which we've had a solution in place for a number of years, into this upstream source system, classification, validation, and calculation. So we'll finish just on future use cases, and I'd be keen to hear anyone's ideas because we're always open to new ideas. Our clients are always challenging us with new ideas. So the obvious one to us is any other tax applications where the underlying document is relevant for tax classification. So here we're talking about withholding tax, stamp taxes, sales taxes. If you're having to make an OPEX versus CAPEX decision which has a tax impact, any of these taxes which rely on a document for calculation and validation are prime candidates, and our clients are asking us to build those. More broadly in finance process automation, many of our clients are going through those cloud ERP upgrades, S4HANA upgrades, etc. And this is the perfect time for them to do that last leg of automation, which isn't necessarily available within those cloud ERP suites. And thirdly, broader business process automation. I mean, the sky's the limit. Anything within a business process which involves someone having to use a document to make a decision or a classification or a validation, Zipline can be applied to. So we're keen to get the core use case bedded down and localised across those 5 countries, but we really see the ability to have multiple streams and multiple different use cases of Zipline in the very near future.
And I think it's useful to call out in 2 and 3 in particular, across all of those 3 use cases, these are real examples of clients in the very, very early embryonic stages of this project that are starting to ask us, could it do this, could it do that? And so we've had clients ask us about withholding taxes. We've got one client where we're actually doing an augmentation of this to do accounts payable processing, so to actually process the expense and replace the existing process altogether, not just do the tax calc. Really exciting stuff, particularly when you see the cost of invoice processing, which I think we had on one of our earlier slides of around $5 US an invoice. The other thing that we've started to do is work together with some of our forensics and analytics teams outside of tax, and we're doing things in terms of complementing some existing processes around loan document analysis for banks, expense fraud analysis, just given the power of the data that we've got in this model. And so yeah, really, we see this as a little humble indirect tax solution that has much greater application outside of indirect taxes and huge potential for our clients.